Hi and welcome to ECCB Connects. This is a production of the Eastern Caribbean Central Bank. It's designed to share with you who we are, what we do, and how we serve you. On this episode, we are talking about something that affects entrepreneurs, small businesses, and the future of our regional economy: access to credit. Why is it still so hard for small businesses to get loans? And could a new legal framework finally change this? Stay with us for the answers to these and other questions as we learn about the Secured Transactions and Collateral Registry framework after the break.
ECCB Connects now has a WhatsApp channel. Follow us and stay in the loop with our latest videos, photos, and updates. It's simple. Just search for ECCB Connects in your WhatsApp Updates tab and get connected with all things ECCB.
Thanks for staying connected with us. Across the Eastern Caribbean Currency Union, many small businesses struggle to access financing. Not because their ideas are not good, but because they do not own land or buildings. Banks often require collateral worth twice the loan amount, and that collateral is usually real estate. So what happens if your business owns equipment, vehicles, or receivables but no land? You are locked out. That is the problem the Secured Transactions and Collateral Registry, or STCR framework, is designed to fix. The project is an initiative of the Eastern Caribbean Central Bank as the bank continues to push for a more inclusive and resilient financial system. I'm joined by one of the consultants on the project, Elaine MacEachern, to learn how the initiative will work and what it means for you, the people of the Eastern Caribbean Currency Union. Elaine, welcome to ECCB Connects.
Thank you, and thank you so much for having me, Shayna.
Great, and you're here to help us to understand what is the Secured Transactions and Collateral Registry framework.
Okay.
Let's break that down and let's do it this way. Let's look at the first part. Secured transaction. What is a secured transaction?
So if you think about a secured transaction, it's actually a legal right over a security interest in movable property. So what do I mean by that? If you think of movable property, we're talking about property that can be used as collateral in exchange for a credit facility. And it is secured, meaning it falls under the umbrella of secured lending. And it looks at things like accounts receivable, inventory, motor vehicles, livestock, crops, factory equipment, intellectual property rights. So these types of asset classes that could be secured, or a legal right is attached to that in exchange for a credit facility.
Now let's look at the next part, a collateral registry. What is that?
So a collateral registry is a public registry that allows a secured lender, so if you think of financial institutions or non-bank financial institutions that are in the business of extending credit facilities, it allows the lender to register their security interest or their legal right over that particular collateral in a public registry, which then becomes searchable by anyone who is interested in viewing the status of that particular collateral.
So let's bring it all together. And in the context of the Eastern Caribbean Currency Union, what is the Secured Transaction and Collateral Registry framework?
From a high-level point of view, it's the creation of a legal framework and the institutional arrangements that allow for secured lending over movable property. So you can think about it in terms of having a new legislative statute and a public registry that's centralized and online, and that can be used from over the internet from people's desktops in their workplace.
Elaine, in simple terms, what problem is this project trying to solve?
Well, what it's trying to solve ideally is the access to finance challenges that MSMEs face. So if you think of the collateral that micro, small, and medium-sized businesses have, so they may have purchase orders, they may have receivables, they may have plant and equipment, that type of collateral that they have can be used for access to a credit facility. Typically, what's happening in some economies in which these reforms are trying to be implemented is to get more financial diversification across the financial sector and allow the unlocking of those collateral types to be used for access to finance or in exchange for a credit facility.
Elaine, we are trying to create a unified collateral registry.
Yes.
And it's across multiple countries. What are some of the challenges associated with doing this?
Well, there are a few, but in particular, I would think because each ECCU member state has its own sovereign jurisdiction, so therefore that requires each piece of legislation or the draft bill that we're putting forward needs to pass through each parliament. And then you, in the drafting of those draft bills and going through the parliamentary approval process, when you're trying to create some harmonization between laws and the collateral registry, you want to ensure that those laws are all going to work in harmony with other laws. So for example, the Companies Act, the Insolvency Act, these types of things. It also means that you have to repeal existing pieces of legislation that are in place today. And so the consolidation of the fragmented pieces of legislation that are in place today need to be repealed and go away. You need to then introduce a new piece of legislation that needs to go through the parliamentary process. And then you also need to get people to understand the new legislative framework and operating environment in which they're now going to be participating in once the draft bill becomes law. And so there's a lot of capacity building that also needs to go along with this type of reform once the legislative framework has been passed.
Now, who really would be using this?
So the ultimate beneficiaries are, there's probably three categories of beneficiaries, I would call them. One, particularly all citizens of every country who could be using their movable property collateral in exchange for a credit facility. But as you drill down, specifically this type of reform tries to really address the access to finance challenges by the MSME sector so that they can use the collateral that they have in exchange for credit. So when you think about that, so that's the SME access to finance piece. The other piece that it helps from a central bank point of view is that you're getting greater diversification across the financial sector, because today there's a concentration on real property lending, on a movable property and fixed assets. And so when you are to look at a financial institution's portfolio, this concentration is risk. And so by getting diversification across the portfolio, you're actually reducing the risk. So central banks like that, financial institutions themselves like that. So that would be another category of a beneficiary. And then ultimately government, right, is a beneficiary because you're getting greater diversification across the economy, which then leads to, business growth, job creation, and greater just economic development initiatives happening.
How do you ensure that this system would be simple enough for those who would be using it?
So I think that's sort of the beauty of this type of reform. You have a legislative framework that's relatively easy to understand and implement and interpret in terms of how it can be used. You have a public registry that enables that legislation to be able to do the job that it's supposed to do. And if you are just a member of the public, you have access to that information because it is a public registry. So as long as you have key pieces of information, you're able to search that registry to get information on whether or not there is an outstanding lien on a particular movable property. So if you think of the example of, I want to buy your car. You're selling your car, we're neighbors, for example. I can come to you and say, Shayna, do you have any outstanding liens on this vehicle? And you may say yes or no. But what I will do as part of my own due diligence is go into the registry. I will search that and I'll say, oh, look, Shayna has an outstanding loan with CIBC, and then we'll come back to you and I'll say, okay, I would really like to buy your car, but we need to make sure that the outstanding loan is also taken care of before we complete this transaction. So that would be one example of how it could be used. And it's as simple as that.
Now, can you tell us a bit about the work that you have been doing as the bank moves ahead with the implementation of this?
So right now we're in the very early stages of the project. And so what we would call this stage is sort of information gathering, socializing the concepts to the key stakeholder groups. So in these types of reform, key stakeholder groups tend to be the banking industry, for example, and anyone in the business of lending. So when I say the banking industry, I'm meaning both commercial banks and non-commercial. So it could be credit unions, microfinance lenders, finance houses, leasing companies, because this new law will encompass all of those as users of the system. And then you're also going to be speaking to industry associations, because now they might have a new channel to access credit facilities. So those would be two large categories of stakeholders. And then, of course, there's the government, various government entities, whether it's the ministries of economic development, industry and trade, ministries of small and medium-sized enterprises, and of course, ministries of justice and finance.
Elaine, this sounds like a game changer. Why should the people across the Eastern Caribbean Currency Union be excited about this initiative?
I find this stuff very exciting. I've been doing it for a long time because I think what you start to see is some more dynamic lending happening in the respective jurisdictions. And you also see more innovative financing products introduced into the economy. So you also see new types of service providers coming into the economy. So you get a more dynamic credit environment, which then ultimately leads to new types of products and services being introduced into a market, and then more opportunities over the long term for everyone. So wherever you might be in that supply chain in terms of trying to access credit facilities.
Great. We certainly look forward to the implementation of this reform in our Eastern Caribbean Currency Union.
Thank you.
And now for this week's financial tip.
Plan how much you need to spend before leaving home to go shopping.
We have come to the end of this week's episode of ECCB Connects. We learned about the Secured Transaction and Collateral Registry Framework, an initiative of the Eastern Caribbean Central Bank, allowing small businesses to leverage what they already own, thus making for a more inclusive and resilient financial system. On our next program, we will continue this discussion with Senior Project Officer and the ECCB's lead on the initiative, Vanessa Pennyfeather, to find out the steps the bank has taken so far towards the implementation of this Secured Transaction and Collateral Registry Framework. Do join us then.